Palantir stock drop. How low could PLTR go? Long-form analysis. Step 1. Understand the context. What just happened? Palantir's stock price recently plunged over 9% in a single day, extending a streak of consecutive losses that have dragged the stock down by roughly 20% from its recent peak. This sharp decline has been largely driven by negative sentiment from prominent short sellers and valuation concerns. The stock closed just below $158, marking one of the steepest drops in weeks. This downward momentum has triggered alarm bells, with some short sellers predicting even more downside. Step 2. Who are the short sellers and why are they warning? One of the most vocal critics is Andrew Left of Citron Research, a well-known short seller famous for making bold calls against overvalued stocks. Left has publicly stated that Palantir's stock price is detached from fundamentals. He argues that Palantir should trade closer to $40 per share based on comparing Palantir's price-to-sales ratio with that of OpenAI. This valuation implies a 75% plus downside from current levels, suggesting the stock is massively overvalued. Step 3. The valuation disconnect. What's the real value? Palantir's current valuation multiples are sky-high. Price-to-sales (P/S) ratio around 80-100 times. Forward price-to-earnings (P/E) ratio exceeding 200 times. For comparison, OpenAI trades at around 17 times sales. Other large-cap tech companies usually trade between 10 to 25 times sales. Even with high growth expectations, these multiples suggest Palantir is priced for near-perfect execution and rapid expansion, which is risky. Step 4. The impact of the AI hype bubble. The entire tech and AI sector has experienced massive price surges driven by retail enthusiasm, social media buzz, and speculative investing. Palantir has benefited greatly from this AI hype. But hype-driven rallies often lead to sharp corrections when reality sets in. The recent drop in Palantir shares could be an early sign that the AI bubble is starting to deflate. Step 5. Government contracts, a double-edged sword. Palantir's revenue is heavily dependent on government contracts, which account for around 70% of total revenue. These contracts provide steady income but limit growth potential due to bureaucratic hurdles and political risk. Any shifts in government spending priorities or political climates can significantly impact Palantir's revenue streams. This heavy reliance increases the stock's risk profile compared to more diversified tech companies. Step 6. Earnings quality. Profits from interest, not operations. An often overlooked point is that a significant chunk of Palantir's reported profits come from interest income earned on its large cash reserves. Up to 40% of pre-tax income in 2024 was derived from interest, not core business operations. This means profitability is partly dependent on current high interest rates. If interest rates fall, this profit cushion could evaporate, leading to earnings weakness. Step 7. Insider selling and share dilution. Palantir has issued a large amount of stock-based compensation to employees and executives, leading to shareholder dilution. Stock-based compensation rose sharply in recent quarters, diluting earnings per share. Meanwhile, insiders have sold significant amounts of their shares, suggesting lack of confidence at current price levels. Low insider buying combined with heavy insider selling is often a red flag for investors. Step 8. Market sentiment and macro risks. External factors also contribute to Palantir's pressure. The Federal Reserve's interest rate policy creates uncertainty in tech valuations. The broader AI sell-off is causing rotation out of high-growth, high-valuation stocks. Macroeconomic risks like inflation, recession fears, or geopolitical tensions may further dampen investor appetite. Step 9. What are analysts saying? Analyst opinions are mixed but generally cautious. Citron Research, Andrew Left extreme bear case, calling for a drop to $40. Visible Alpha consensus. Price targets vary widely between $45 and $200, averaging around $150. Jefferies and HSBC acknowledge growth but warn valuations may be too rich and risk downside. Investors should understand that while some see Palantir as a long-term winner, the stock's current price reflects very optimistic assumptions. Step 10. Technical levels and price targets to watch. If the sell-off continues, Important price support levels to monitor include $100 to $140 range. Potential support area where buyers might step in. $40 level. Represents the severe bear case floor suggested by Citron. A breakdown below these support levels could accelerate the decline, while a bounce could signal a stabilization or relief rally. Step 11. What should investors do? Evaluate your risk tolerance. Palantir remains a volatile, speculative stock. Consider reducing exposure, especially if you bought near recent highs. Diversify. Don't bet too heavily on any single high-risk stock. Stay informed. Watch earnings reports, government contract updates, and macro developments. Wait for clearer signals. A lower valuation or consistent profitability improvement could be better entry points.